Good morning and welcome to the Market Forecast. I'm John Hoagland. As always, thanks for trusting me with your time. It is Friday, February the 26th. Finally, Friday. A long week of a difficult week, challenging week, lots of opportunity. But I think the goal for today is just to survive the rest of this week. I put that in the title for this morning's forecast. The survival is the word of the day. As our fearless leader, Mike Patak, always said, always trade for tomorrow. Let's get through this day and make a little bit of money. It's nice to see everybody out with me, I should say, here today. Good to see everybody. Sorry about the little problem I had yesterday. I think we've got that fixed for us today. Looking forward to seeing what we're seeing in these markets and on the charts. As always, we're going to be looking through the consistent lens of context and through the lens of risk management, always thinking first about the risk you're taking in any trades. As far as the eco numbers due out this morning, 7:30, the international trade, income and outlays, retail inventories, and wholesale inventories already out this morning. I didn't see anything that was too unusual in those numbers. I don't think the markets are responding to them with great haste here. So we've got a little bit of digestion going in these equities. 8:45 this morning. Of course, this is Central Time. We've got the Chicago PMI numbers coming out, and 9 o'clock, the Michigan consumer sentiment numbers still due out. Nothing expected to be too impactful in these markets today. We're seeing the markets kind of consolidating, digesting what happened yesterday. Stocks saw a pretty decent asset relocation yesterday when those 10 years reached that 1.5 rate. The dollar certainly has bolstered itself overnight. It's basically trading a full point above where we talked about it yesterday on the market forecast. So we had a little bit of a boost in the dollar. The House is set to vote on stimulus today. I would say there's probably a pretty good chance of that passing, although we're going to have a problem with that $15 minimum wage on the table. Some of the big box stores like Amazon for one, but Costco is actually talking about having a $16 minimum wage to work at Costco. So some folks really liking that idea. There's others not so much. It's going to be very difficult for your mom and pop stores to pay everybody $15. It's a hotbed subject and under much review and discussion today at the House of Representatives, I'm sure. But I'm pretty thinking that they're probably going to pass this stimulus package. Crude prices are off a little bit this morning. We've been kind of talking about the idea that it may be a little bit overdone to the upside. We do have an OPEC meeting next Thursday where they're going to be discussing, well, we're getting some decent prices for our crude oil. Maybe we should pump some more. Maybe that's part of it. Maybe a little bit of profit taking off of some of the upside momentum that we've had for the past couple of weeks. It's going to be another interesting trading day. VIX down about 4% at 27.78. Dollar index again up at 90.57. Make sure you like, share, comment, question, feedback, and heckling are always welcome here at the Market Forecast. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. And I see we've got somebody new here today. A son 250. A son, welcome. Glad that you're here. Hopefully you're going to find some good information, and we appreciate you checking in and letting us know you're new. If this is your first trip to the Market Forecast, let us know you're here. We like to get to know you. As always, we kind of go through the list and say good morning to everyone. Brian, first in the room, you win the prize. Good morning, Ralph, Rob, Murph. Another great day. Bill, Tanya. Hey, son, good to see you. Good welcome to the Market Forecast. Clarence, Murph, Richie, Felix, good to see you. Brian, my brother Rick, good morning. Troy, Taurus Trader, good morning. James, Mr. Shine's Mystery Channel, good morning, everyone. The chef, Mike, is here. Steve, Trading Research, Kevin Guy, Ashton, D. McGregor, Shady Trader's here with us today. Hello, Shady Trader. Danielle, Art W, Tim G, Oleg, Danny Ireland. Old school volatility in the 10-year auction yesterday. Wow, baseball starts Sunday. Go White Sox. Oh, my goodness. It starts Sunday already. Unbelievable. Emma, good to see you. John, Rod, Mark, Andre, and Emma Weber, welcome. Yes, greetings, happy Friday. I'm going to pop the link to next Wednesday's group coaching session in there if you're so interested. Just register and we'll see you there. I like to see everybody every day here on the Market Forecast, and hopefully, as always, we're going to find a way, to some degree, to help. That's the goal. So without further ado, let's start looking at these charts here. As always, we start with the daily in crude, just kind of going left to right. So let's take a look. Got them stable here, and let's see how this plays out for us. Here's the daily, showing quite a bit of it here. All right, so we were noticing back here, okay, in this area, we were getting a big boost in open interest. Open interest is the total number of contracts outstanding. This has been treating me a little bit chunky this morning. So, all right, so we were noticing a lot of open interest coming in here. This is energy. This is, if you'll pardon the pun for crude oil, this is energy in the marketplace. We've seen a pretty good run up. We went, from about $54 on the breakout to the upside to about $64 on the upside. It's a $10 move. Noticing that we're starting to see some areas of balance that are overlapping each other indicates that this market may be struggling to continue its move up. It's going to need a little more time to digest these levels or a pullback in order to continue its move to the upside, if that is indeed the case. We've seen some pre-weekend, some pre-OPEC meeting adjustments in inventory here early in the last night and early in the session here today. We're always trying to think about, if the market is attempting to go in a particular direction, and I would say that this market is continuing to try and push higher, we are looking for, what are we looking for? We're looking for how good of a job it's doing. Is volume increasing? Is open interest increasing? And we've started to see open interest increasing after the rollover. So there's still a lot of energy coming into this market, but again, it can't go one direction all the way. I'm thinking that the direction is higher. The performance of the direction is kind of falling off a little bit. So I think we're going to need to consolidate up here or have a pullback, and then we might see price continue to the upside. So much of this is dependent on demand. If we can open up the economy, if we can get out and go to restaurants and drive cars and do all those things, it may have of course, a large effect on. I appreciate that energy. Yes, very slick. I would just kind of a pun. It kind of comes out every day, but so. Thinking about what we're thinking in the longer term here, we may be putting in a top for the time being. Of course, anything is possible and likely in futures trading. We've got settlement is all the way up here at 63.53. Put that on your chart. Settlement is the closing price from the previous day. It's what the exchange marks margin to. So that can be an important level. All of our overnight activity pushed the price lower and lower off of this settlement price. So we've got a pretty significant overnight inventory that is holding shorts. We've opened with a gap. If we cannot close this gap relatively early, we may see our overnight shorts continue to get paid. It's going to take daytime frame participants to continue to push this market lower. If we think we've maybe found a top that might be in for a little while, we'd be looking for opportunities to sell strength. So if we can't close this gap, this might be an interesting spot here for a continuation to the downside. Just following gap rules. When we open with a gap and we cannot close that gap relatively early, then we trade in the direction of the gap, which would have us looking for shorts for continuation to the downside. The caveat to that is usually we're going to have an overnight inventory that is heavily one-sided. We've got a lot of shorts in short time frame in this market. If they don't get what they're looking for, and that's continuation, if they bail, they may take us back up towards settlement. Just something to keep an eye on. So what I would kind of use as a pivotal level today might be the gap fill itself. Sometimes that works, sometimes not. Nothing works all the time. Nothing never works. I don't even like to use the word works when it comes to when the market gives us profits. It's a plan. We plan for it. We need the other participants to move price in our direction. Take a look now at the S&Ps. You guys spent enough time there on crude oil. S&Ps. So I adjusted all these percentage of pullbacks, and they did not hold. The only one that is correct on the S&P chart here is going to be the 5%. We have a weekly kickoff, 38.58, which was useful several times this week already. If we get a move back up to that, it might be an interesting spot for an execution. And we still might be kind of building into or creating a head and shoulders type of situation. So, as long as we hold below this weekly kickoff low, we had big volume on this move to the downside yesterday. We had a big increase in open interest as well. Money coming into the short side. Money coming into the short side on higher volume. This might make our weekly kickoff low here, 38.58, extra useful for us today. I'll be keeping an eye on that. Rates, inflation, fears bring a risk-off mentality. But for how long? I mean, we've been hearing that I've been hearing that for 30 years. We just came off our all-time highs. So, what do we do in the overnight? We didn't really do much. The market really kind of consolidated. Let's get this party started here. These charts have been a little bit chunky for me this morning. So, all right, so here's our big move to the downside. Here's the weekly kickoff low, 38.58. Pretty good support level the day before. Ran right through it yesterday. Now we're holding below it. Settlement is right here, 38.28 even. We don't have any real overnight inventory with which to look for early opportunities. We're inside range in value. Look at the repair we did yesterday early in the session. We had a big hole in this volume profile here yesterday. We filled in that hole on the way down, but there was never really any good structure to lean on to look for an opportunity. So I was able to avoid trying to pick a bottom in that move to the downside yesterday until way late in the day. So hopefully you were able to take advantage of this move or at least stay out of the way. Right now, we're kind of just digesting this new level, this new area of weekly kickoff low, prices below that. So, as this market opens up, we don't have any inventory. Again, settlements 38.28. I'm going to try and stay patient. I'm going to see if I get an opportunity near my weekly kickoff level down here. We've just barely taken out, I think, our weekly low right here. Okay, I don't even think we've taken that out. So this was what, Wednesday, Thursday, Tuesday, Wednesday, Thursday. We haven't even taken out the weekly low yet. It seems like we really knocked this market for a loop yesterday, but not really. I'm going to stay patient in this market and look for opportunities as the day goes on. Overnight high, overnight low, weekly kickoff levels. Those are all going to be the important things that I'm going to be looking at for the opportunities in the E-mini S&Ps today. Now on to the Nasdaq. Similar, but different. S&Ps haven't even traded to the 5% correction level. Now, if my math is right, that's right here, 13,205. That's a 5% off the high. 10%, 12,510. We're way deeper into this move to the downside in the Nasdaq than we are in the S&Ps. A lot of that move to the downside yesterday, people are attributing to tech. So we are, more than 5% off the all-time high. That's if my math is right. It didn't look right to me. I did it through 2 times. So this looks like a correct number here. This is 5% off. This is 10% off. We get down to 10% off. We're back here near the beginning of the year. So we may be taking off profits that have been accumulating since before the beginning of the year if we get down to this level. Again, I'm thinking that we've expended a lot of energy. We had a pretty decent increase in open interest on this down move yesterday to the Nasdaq. That was 7,800 contract increase in open interest. But again, settlements here, 12, 8, 31, 75. Put that on your charts. We're right here. We're right in the middle. We are at the cozy, happy point of control, the highest volume level from yesterday. There's no real reason to feel like I need to get into anything very early today. It just says to me that our better trade locations are going to come as the day goes on. So again, I'm going to try and stay patient in the Nasdaq. Digestion overnight. We just kind of took out the high of that digestion area. There's lots of areas, to look for opportunities in yesterday's profile. We may actually come into some sort of repair to come back up to here. I don't know. A lot of this depends on the news. There's going to be some headline news, so watch the information regarding the stimulus package and anything else. Of course, everybody's going to be watching those rates today. You see the rates start creeping up again. These are going to be little seesaws in ways that we're going to be able to look for opportunities in these markets. All right, now let's take a look at gold. 1760 weekly kickoff, pivotal today. Obviously, in medium time frame, we're putting in lower lows, we're putting in lower highs. The structure to the downside is largely intact, and there's a lot of people that don't understand why. And I don't really care if we understand why. It's the visual. It's the trading what you see that kind of helps. You can have a long bias for gold and just kind of get smoked all the way down here. So we're going to trade what we see. I'm looking at this 1760 weekly kickoff level as a kind of a pivotal level, long above, short below. Be careful of that. Be careful of that. If this market becomes magnetic, it can just chew you up all day. Volume was really good on this move to the downside, but we lost 2,400 in open interest. That's a little bit concerning for continuation to the downside. I would want to see some contracts being created on the downside instead of longs being liquidated. That's what that looks like. It was high volume, but losing that amount of open interest kind of confuses it a little bit. So I'm going to kind of be patient, watch around this 1760 level. We've had a couple of opportunities in and around it on the 30-minute chart, and it's been easy to be chopped up in. So try and stay patient. When we opened, we left the opening range at the high of the regular trading hour session, which was, in essence, an exact gap fill from yesterday. So we started off to the downside. We've taken that out. We're not really showing signs of acceptance and value from yesterday, at least not yet. We've got overnight shorts here. 1775.40 is settlement. Put that on your charts. All of our overnight activity was to the downside, and now we're also working against an important inflection level like that 1760 weekly kickoff level. So again, if we can't accept below it, I'll look for a move back up towards settlement. If we accept down below it, I would like to see some volume and open interest come into that downside move tomorrow, or I should say on Monday, because with the open interest kind of falling off down near an important inflection level, I think the probability is more of a failure below that level and a move back up higher from that level. So, yeah. Okay. Take a look at the euro and the 10-year, and we'll get down to business. Okay. Euro took a really good look above this weekly kickoff high at 122.100 yesterday. Pretty big volume. Pretty big open interest increase, 19,000 in open interest increase. Now we're coming into rollover in our equities and in our currencies. Not seeing this as necessarily a function of that here just yet. I'm thinking we got a little bit too high up here, and we had some sellers come in and barrel into some new positions to the short side that they're continuing to get paid on. We've had a move in the overnight down to near this previous weekly kickoff level, which I'm viewing as pivotal. It's pretty centrally located in the weekly kickoff range. So I'm looking for another test of this, and if we can't hold above it, I look for a move back down to this weekly kickoff low of 1975. Look at the 30-minute chart. Wally. Okay. Here's our move up above. We were unable to sustain. We put some pretty good volume up there, but by the end of the day, we closed it back below. Our settlement price is 121.88 and a half ticks, pretty much our overnight high within a half a tick. We've got a lot of shorts in this market down near a previous important inflection level. I'm going to be careful looking for shorts here. I'm thinking that we may see much more of a pullback towards a gap close. If we close the gap, then I'll look for a move back to settlement before really trying to look for shorts in this, unless, of course, we can accept down below 120.90 level, in which case I'll have to readjust and look for an opportunity for a continuation below that level. But there's a whole lot of shorts in this market from overnight, and these aren't the kind of shorts that are going to be holding on for days or weeks. These are pea shooters like me. They're not going to be taking these positions home over the weekend. If they don't continue to get paid, we may see a nice move up. All right. And the 10-year. We just added the 10-year to the market forecast, and wow, what timing. It seems to be the thing that everybody's talking about lately. So we lost 174,000 in open interest on pretty decent volume. It's rollover. That is a system. That is a function of rollover. Lots of folks just getting out of positions and then working on moving them into the June contract. So this is, I'm not looking at this as a huge drop in open interest at this level. It's kind of fallen into an area of range here. It's an inside range, inside extended trading hour range. It's just kind of fallen digestive here. There'd be a lot of folks wondering what's going to go on with the stimulus today. Of course, that's going to be a topic of discussion all day long. Settlement 132.18 and a half 30 seconds. We've got very little, if any, overnight inventory with which to work with. Again, settlements here. We've just really been consolidating here all night. Let me straighten this out a little bit. Hold on. Whoa, Nelly. Whoa, okay. All right, so with no real overnight inventory, with no real direction from the overnight, I'll be watching overnight high and overnight low. Overnight high is right near the point of control from yesterday. That's going to be a very comfy visual level for the market to get to. If it does, that might offer an opportunity for us because we've got our overnight high and point of control very close to each other. Overnight low, pretty stiff rejection down at this level at one point yesterday, still showing resistance at that or rejection down at that level. We're right in the middle of yesterday's range. Even though we're kind of bordering on value, I'm going to again suggest trying to stay patient. All right? So we are off and running for our Friday session here. You guys like my pun. Lots of energy in crude oil, right? All right. The moving averages on the charts on the ES, I believe those are, it depends on if you're looking at the daily or the 30-minute chart. The daily, I think that's a 20 and a 50 exponential moving average on the daily, and then the 30-minute chart, I have 9 and 13 session exponential moving averages. It was not recorded. We're talking about trying to find a way to distribute the group coaching sessions to those who are signed up for it, and that's something hopefully we will get fixed and taken care of in the next couple of weeks. get a lot of requests for the recordings, and it's a lot of administration to send them out to everybody. So we're going to work on a way to do that. Good. Hey, Rick. They're working on. Yes, right. Thank you, Murph. Thank you for letting them know. Stronger dollar, not good for gold, absolutely. But our silver is holding in there. Thank you, Taurus Trader. It's very nice of you to say. I do this because I love this. I love this industry. I love the people in it, and I always want to be able to provide something to help those that are always this isn't easy. This is a kind of a constant opportunity to continue to learn and grow as a person and as a trader, and I like being along with you guys for the ride. All right. Dad joke. It's my pleasure, Bulldozer. Yeah, you have to use stops, Murph. I don't even know who that is, but you gotta protect yourself. Thank you, Andrea. Yeah, I can certainly get those recorded, and we're working on that trading research. We'll get that fixed for you. All right, let's take our deep breath and be ready for the equity open. Stay humble, grateful, and creative today. It's Friday. I'm going to miss you for the weekend. Make sure you get some good rest. Be good to yourself. Be good to others. Wash your hands. Survive this week. Survive today. That's the goal, is survive every day. Build your account a little bit at a time, a lot at a time, whatever it is. Just survive. Get out there and profit today. If you get some good profits early, there's nothing that says you can't go and take the rest of the afternoon off. In the pit, everybody that was there afternoon was chasing money. Don't chase money. Have a great trading day. Have a great weekend. We'll see you Monday morning for the market forecast again. We'll get that situation with the recordings for the group coaching sessions figured out for everybody soon. And again, have a great weekend. Get some good rest. It's looking like it's going to be another challenging week next week. Aren't they always, though? Trade well, everyone.